Along with my day job running an investment business, I started Tinsley Park Talks, a global networking and leadership platform where I interview industry legends from finance to tech and great thinkers to notable celebrities. In these interviews, we discuss great ideas around investing, entrepreneurship, problem solving, and all other lessons of life. Welcome to another episode of Tinsley Park Talks. Hey guys, welcome to another episode of Tinsley Park Talks. If you enjoyed this video, make sure to give it a like and subscribe to our channel. Thank you. This program is in partnership with Nesh. For more information, please click on the link below. Jorge Familiar is the treasurer of the World Bank, managing a staggering portfolio exceeding $250 billion. Together, we trace the origins of the World Bank, explore how they work, and who actually owns the World Bank. We also discuss how Jorge is managing his portfolio in regards to lending to nations grappling with crisis post-COVID. Jorge also shares what it takes to become the treasurer of the World Bank. Jorge Familiar, this is such a great pleasure to have you on today. I mean, you are the treasurer of the World Bank. Welcome to the show.
Thank you so much, Najib. It's a real pleasure to be here with you today.
And as I understand it, you're joining us from Mexico. Can you tell us a little bit about where you are? And are you stationed in Mexico, or do you move around a lot?
No, I'm stationed in DC, but this week I'm working from here. I had some matters to attend to, and I'm working from here.
Fantastic. I have stories about Mexico, but I'd like to hear your story growing up. And I'm assuming you were born and raised in Mexico. Can you kind of take us back to your early days and your roots?
Yes, I was born here in Mexico City, all the way from kindergarten to my master's degree. And then I started my professional career here in Mexico as well. I worked for many years in the securities, the equivalent to the Securities and Exchange Commission, okay, and then the Banking and Securities Commission of Mexico. Both institutions merged, and I was there for 11 years and finished as vice chair in charge of the whole securities market supervision, securities and derivatives market supervision.
Got it. And so how did you end up at the World Bank? What was the journey there like?
Well, it was not something planned, right? When I was working for the Banking and Securities Commission of Mexico, I reached a point where I had, pretty much pushed for a major regulatory update. No, so I had been in charge of proposing a new mutual fund law, a new securities market law. I had worked on changing every single piece of secondary regulation of the Mexican securities market. So it came a point that I needed to do something different, and I had a very strict cooling off period. I couldn't work in anything that I had regulated or supervised for a period of a year. And, in the position I had in the commission, I regulated and supervised financial institutions, the stock exchange. I approved public offerings. So you could even argue that I supervised or regulated the largest companies in Mexico. So I really had, very few options in Mexico. And at the time, I had interacted with the World Bank in several processes, like the financial sector assessment program or the reviews of standards and codes in which the World Bank had been involved. So I had developed relationships, and I thought, well, maybe it's a good idea to go for the World Bank, be there for, let's say, 9 months as part of this cooling off period. I will go there as a consultant, something, temporary, and then I will come back and I will work for, in Mexico, maybe for the financial sector or something like that. I had been in the World Bank for just a few months with this very short-term plan, and then I was invited to represent Mexico, Spain, Central America, and Venezuela at the board of the World Bank. And I did that for 4 years. And during those 4 years, the institution even went through a major corporate governance crisis, and I had a background in that, so I played a role. And after that, I came back to Mexico. I was invited by the government to run a government-owned financial institution. So I was CEO of an institution that is in the consumer credit space. And then I was invited back to the World Bank as first as a corporate secretary. So I went back as vice president and corporate secretary, did that for 4 years, and then I was invited to move to the development side of the business. So I was in charge of our portfolio in Latin America and the Caribbean. And then I was invited to the financial side of the business, so I became controller, and now I'm the treasurer of the World Bank. So as you can see, it has been a very eclectic career.
Very eclectic career, and it is to be continued. So, Jorge, what does a treasurer do for the World Bank? What are some of the key responsibilities that you have for this behemoth of an institution?
Well, so I would like to see the responsibilities, my responsibilities, the responsibilities of the treasurer divided into, let's say, three big buckets, maybe two pillars and one cross-cutting issue. No, I mean, one of the pillars is to making sure that we fulfill our mandate, right? And our mandate is very clear. It is to fund the bank. It is to invest our assets, ensure that all of the flows of resources are conducted in a proper way, that our assets and our liabilities are adequately managed. So that is from the perspective of the institutions. Then we also manage assets for third parties. We have a program under which we manage assets for example, for central banks. And out of the fee that participants pay to the World Bank, we give back the fee in technical assistance and in the training for their staffs. And then I'm also the pension finance administrator, so making sure that the pension is run properly. So those would be most of the basic, let's say, foundational responsibilities. As the treasury of the World Bank, has an enormous amount of experience gained through decades of interaction with global markets. We also tend to share the experience that we have, because after all, we are the treasury of a development institution. So we have technical assistance programs where we support countries, for example, in their issuance of sustainable finance instruments like green bonds. I mean, there's lots of innovation that has gone on in treasury throughout history. So, for example, we were the issuer of the very first green bond in history. So when you do that, you can also share that knowledge with others. So we do that with, for example, with governments. We also help them set up their sustainable development financial markets. So there is this advisory service component to it, and we interact with our client countries when it comes to setting the financial conditions of the loans that they get from the World Bank. So, we don't grant the loans, or we don't necessarily manage the loans, but we do interact with the countries in the determination of their financial conditions, and we offer them also multiple risk management tools and instruments. So that's the first pillar, no? And then the second pillar is the delta, no? And I talked already a little bit about innovation, and the second pillar is precisely as always pushing the boundaries on what we can do, no? And right now, an area of focus would be, I would identify three important things for us right now. One is expanding what we do in the disaster risk management space for the benefit of our client countries. we want to expand what we do in catastrophe bonds for the benefit of our client countries. Then we have also innovated recently in the outcome bonds space. We have been issuing some very interesting bonds that give investors exposure to specific projects that generate significant, let's say, impact. And then the third area where we have been innovating recently is the whole space of technology and financial markets. No, so for example, we issued the very first blockchain-based bond, and very recently we issued the very first bond under Euroclear's blockchain bond platform, which covers both the security but also the clearing and settlement part in the first, let's say, rings of the clearing and settlement of the transaction. And then there's also a cross-cutting element of my responsibilities and our strategy, which is people. No, investing in people, maybe making sure that you have the right team, making sure that everyone understands the strategy, is aligned with the strategy, and moves in the right direction in terms of implementation. So that's how I envision my responsibilities as treasurer.
Thank you for sharing that, and also kind of highlighting what a treasurer does, but which seems like sort of post-identification of where the loans are going to go, and it's already committed, whichever country is the borrower there. And then once that commitment is done, you're, as a treasurer, then you're kind of managing the cash management side of it, the disbursement of the funds into the company, into the countries, and making sure that you have the right hedging mechanisms and all the other capital markets tools that you mentioned briefly that you guys are also providing, which is part of the innovation of the World Bank, and we're going to get into that in a little bit. But was that sort of accurate? How I depicted your role?
It is very accurate. No, we estimate our liquidity needs. We fund the institutions. We manage the assets. That is the asset. We manage the risks. We ensure the proper financial management of the institution. We interact with rating agencies. We interact with investors, and we make sure that we have a broad and diversified investor base and market base, so that we can ensure that we can fulfill the funding needs of the institution.
So I want to talk a little bit about the history of the World Bank, like how it got created. And as I understand it, post-World War II, there needed to be some significant development done, especially in Japan and Germany. And so there was also just chaos economically during that time. So there's a Bretton Woods conference, as I learned in history books, where a group of nations got together, about 44 countries, I think, at that time, and they decided that there should be this international monetary system framework, where it was very necessary to have such coordinated central banking network in order to make sure currencies were stable across the world in terms of just financial stability, economic stability, and also there was IMF was also created around the same time. So yeah, I'll stop there about my basic understanding of the history, but I'd like to kind of ask you, if you could maybe add a little bit more about the history, and then oftentimes we get confused between World Bank and IMF. So if you could probably distinguish between the two a little bit, that would be very helpful.
So these two institutions were created at the same time. The IMF more focused on macroeconomic and financial stability, right, and focused on balance of payments issues. And then the original mandate of the World Bank was reconstruction. In fact, the proper name of the institution that was created at the time is the International Bank for Reconstruction and Development. That is what we understand as World Bank in financial markets. through the years, the World Bank went from reconstruction more to the second part of its proper name, which is development, right? Poverty eradication, reduction of inequality, and now more and more attention to global public goods. And we just updated our vision and our mission to say that our vision is a world free of poverty in a livable planet. And that brings in the sustainability angle, the global public goods angle to everything that we do. From that first institution, which is a bank, it is a bank that has capital, goes to markets, funds itself in the market, and grants loans, originally for reconstruction, later for development, for poverty eradication and poverty reduction. Other institutions were created. The second one is the International Development Association, which, together, IBRD and IDA, as we call them, which is replenished every 3 years.
For our viewers that are not familiar with the acronym IDA, could you tell them what that stands for?
International Development Association. Yes, sorry for that. We speak in tongues in the institution, and that is never appropriate. We should use the proper names. So it started as a fund. It was replenished every 3 years, and this institution grants very concessional loans or outright grants to the poorest countries in the world that are not creditworthy. While IBRD, the International Bank for Reconstruction and Development, the World Bank, the original World Bank, grants loans to credit-worthy developing and emerging countries. And then later on, in the 60s, another institution was added to the group, which is the International Finance Corporation, which is an investment bank with a focus on development. This institution invests in grants loans and invests in equity of companies that create positive externalities in terms of development. Later on, another institution was added. It's the Multilateral Investment Guarantee Agency, or MIGA, which grants insurance against, let's say, political risks and other types of risks to private investors going to emerging and developing countries, and has expanded to guarantees as well. And then there is a Center for International Disputes, also to settle disputes between private institutions and countries. That is not a financial institution, but it's part of the World Bank Group.
Got it. So where does IMF and World Bank stand today? So would IMF would be more for developmental financing, and World Bank would be more for developmental financing of countries that need to rebuild poverty. Is that accurate?
And IMF for financial stability, for global financial stability, right? So our mandates are complementary. We work very closely with each other. But the World Bank is in the development space. Right. The IMF is in the financial stability space. There is a very strong overlap, right? Because you can only have poverty reduction when you have economic growth, and you can only have economic growth when you have macroeconomic stability. So, exactly. Having the right macroeconomic framework, a stable macroeconomic framework, is fundamental for countries to be able to fulfill their goal when it comes to growth and poverty reduction. And then when you think about inequality, poverty also requires other elements, right? Good macroeconomic policies, good macroeconomic management, and macroeconomic stability are necessary conditions, but not sufficient to generate poverty reduction. You need many other things. You need good education. You need good infrastructure. You need good. You need elements that allow for growth creation and allow for the improvements of the lives and livelihoods of the population. And then when you think about inequality, if you want to achieve equality of outcomes, you need to create equality of opportunities, right? So inequality is addressed through the creation of equality of opportunities. So, in the World Bank agenda, elements like education, health, again, good public services, good access to infrastructure, to transport, to internet, right, to communications. All of these things are important elements to generate better opportunities that will translate in less inequality. And the global public goods element, or the sustainability element, is cross-cutting and comes into play from the perspective of, today we know that what got the world to the level of development that we have today, the development models that were applied, are not development models that can continue to be used going forward. Development requires energy. If we use energy which is highly emittent of carbon dioxide, yes, we will achieve development in a planet in which we will not be able to live.
Right.
So that is incompatible with our ultimate objective.
Makes sense. Makes sense. So I want to kind of talk about how the World Bank actually works. Who owns the World Bank? Who are the stakeholders of the World Bank?
Our shareholders are today 189 countries. So from that original Bretton Woods conference, a series of countries have been, joining the bank and the IMF throughout the years, and our capital comes precisely from the contributions that we have received from those countries. So let me define the bank in a way in which I am sure you have never heard it defined. It's a financial approach to the definition of the World Bank. The capital that we have received as paid-in capital from our shareholders since the Bretton Woods Conference in the 1940s is $20 billion. With those $20 billion, we have gone to markets since then, since the 1940s. We have raised $1 trillion, and we have provided loans to emerging and developing countries for, let's say, $830 billion, to create positive development outcomes. Of course, that has allowed us to generate earnings, and we have retained earnings. We have reserves that have grown our capital base, and we have also, IBRD, the original World Bank, has also transferred part of those earnings to the International Development Association. And the amount that has been transferred is $20 billion. So it is the equivalent of all of the countries that are our members, taking $20 billion, giving them to the poorest countries in the world, and creating this fantastic private capital mobilization engine, creating it out of thin air. And I would argue that this is the largest and most efficient private capital mobilization engine ever created, because our source of funds are financial markets. So these are resources that could go to fund any other initiative.
Got it. So talking about those financial products, can you expand a little bit on the kinds of financial products that you're going in the market to raise on the back of that paid up capital that you already have?
Okay, so, as you can imagine, given the numbers that we have been talking about, we have a large funding program. So IBRD's funding program is of between $50 and $70 billion a year, right?
Billion with a B. Yes.
Billions with a B, yes. And we fund ourselves in multiple markets around the world. I mean, we issue 20 different markets in multiple currencies, different maturities, different characteristics, right? I mean, we seek to diversify our funding sources on a yearly basis. And then on the other side of the balance sheet, we have, only sustainable development projects, right? So you see, in around 2008, a group of Swedish investors came to us with a very interesting idea. No, they were saying, look, we manage assets on behalf of third parties. We are institutional investors. Our assets benefit multiple constituencies, and our constituencies and us are worried about risk and return, yes, but we also want to create impact. And in particular, we are interested in creating positive impact in the climate space. We want to be able to say that the investments that we are making are green. And that is when we came up with the concept of a labeled bond. We issued the very first green bond in the world. So we created a framework not to earmark resources, but to trace the resources that we were receiving on our funding side with projects on the other side of the balance sheet that were consistent with the objectives of these investors. After a while, we recognized, or we came to realize that everything that we do, because we are a very particular type of institution, falls into the sustainable development space. So we decided to label all of our bonds sustainable development bonds, and we issue a yearly impact report where we precisely trace the resources that we get from markets to sustainable development projects on the other side of the balance sheet, all related to the sustainable development goals. So, that's again something that we have been doing for several years. It's experience that we have, and this is experience that we have shared with others. No? So we have been, I would say, instrumental in the creation of the sustainable development financial markets. More recently, we have continued to innovate in this space. But you see, those are not the only areas where the Treasury of the World Bank has innovated. Let me mention a few that I am sure that you don't have in your radar screen. The World Bank was the first counterparty of the very first currency swap in the world. The World Bank was the issuer of the very first global bond in the world, the first internet-based bond. We issued the very first blockchain-based bond. No, so again, there's lots of innovation that we have been a party to throughout the year. The most recent innovations do relate to outcome bonds and to additional layers of sustainability and impact that we are making available for investors. And we can talk about those if you wish.
Sure. Yeah. That's helpful. So some of the main goals you mentioned: economic development, poverty reduction, healthcare infrastructure, job creation, education. Those are all key aspects of focus for World Bank as the capital goes in and then managing it and making sure also sustainable. How has the portfolio evolved, over the decades, or much of the time you spend there, in terms of seeing those results of actual development happening from the time you actually started the project? I know great examples are out there, like Japan and Germany, the way they rebuild, and I believe World Bank played a huge role in that. Are there similar stories like that since then that you can share?
Well, I mean, look, I would argue that the World Bank has created positive externalities in development all around the world. We are a financial institution, but in the end, we are mostly a knowledge institution. So we accompany countries in their path for development. We learn together with countries. We help countries, or we partner with countries in finding solutions for complex development challenges. And what we learn in one country, we make sure that we share it with others. No? So that is the basic, let's say, engine of development learning and development knowledge that we work on. No? Now, when you think about finance and giving, let's say, investors in financial markets access to specific projects, right? I mean, first and foremost, whenever someone buys one of our bonds, they are supporting our World Bank development operations, right? But as of late, we thought, well, with this very large funding program, maybe we can do more. And we also noticed that certain investors wanted to have more exposure to certain projects. No? So we came up with an idea a couple of years ago, which is which is an outcome bond, and the very first outcome bond that we issued is called the Rhino bond. Rhino, because it is related to the conservation of black rhinos. And the way this bond works, it's a $150 million bond. The coupon, instead of going to investors, it goes to two parks in South Africa and supports a black rhino conservation project. If at the end of the life of the bond, which is the end of the life of the project, we have more black rhinos than a given number, a donor will come in, make investors whole, so pay the coupon, plus a premium depending on the level of success of the project. If the project is not successful, investors are running the risk and they will not receive their coupon payment. So that was the first one.
Sure.
Then we thought, well, this is very interesting, but this requires a donor. What if there are some projects out there that, for example, can create or generate carbon credits? So the second bond we issued is a bond that supports a project that generates carbon credits. In this particular case, some schools in Vietnam, boil water by burning wood, that
right.
People are sent out to pick up. And if you substitute that with a very basic tabletop filter, that generates carbon credits. So again, the coupon is financing the production and distribution of these very basic filters. And when carbon credits are created, and a financial institution is going to buy them at a agreed upon price, and this is going to be the basis for the payout to investors instead of their coupon, and they are going, if the project is successful, going to receive a higher return than they would if they invested in a regular World Bank bond. But again, they are running the risk of the project being successful. And the latest one we issued is a similar bond, but also deals with plastics and the creation of plastic credits, which, as you know, plastic pollution is a massive challenge that the world is facing at this time. So these are some of the latest innovations that we have put out there in financial markets.
If I may ask you about the portfolio size of the World Bank today, I would imagine it has grown substantially since COVID happened because a lot of countries around the world needed help. They needed liquidity help, they needed loans, and I would imagine there's a lot of new issuance that took place since then. And my concern and my curiosity is how are these countries going to be able to pay these loans back? Because a lot of these countries were already in fiscal deficits and negative current accounts, etc. And frankly, countries like Sri Lanka and Pakistan, they don't have the US dollar, the greenback currency. So, and I know you're innovating through financial products and swaps to counter those kind of currency risks and country risks, etc. But given all these complexities that exist with other nations that are taking this money from World Bank, and as you're managing it through liquidity and certain products and risk management, how do you foresee countries like Pakistan and Sri Lanka and others that have taken World Bank money to be able to pay back? What are some of those covenants, and how are you designing those policies?
Okay, so now we are going back to the, let's say, to the operational side of the bank, the development side of the bank, right? And
right.
I would say two things. No, the first one is in general, right? I mean, with respect to our mission of poverty reduction, of reduction of inequality, of creating a livable planet, right? From that perspective, debt is a major challenge. Even before the pandemic, after many years with very, let's say, mild financial conditions, right, with very low interest rates, with abundant liquidity available, the levels of debt in many countries around the world, particularly the poorest, was already high. And it was an issue of concern. And it goes back to something that we already talked a little bit about, which is macroeconomic stability. Good macroeconomic management is a necessary condition for growth and poverty reduction, right? So when debt is unsustainable, when most of the countries, gross domestic product, or a very large proportion of a country's gross domestic product, GDP, is going to the payment of interest, then that country cannot invest in the things that are necessary to eradicate poverty and to improve people's lives. So high debt was already an issue of concern before the pandemic. The pandemic made things worse because there was a need to respond. And countries that already had high levels of debt had to go, in many cases, out and get more debt to face the pandemic. So today, you have a large number of countries, maybe even a majority of emerging and developing countries that have very high levels of debt, that are reaching a point of in which debt is not sustainable. Now, that does not mean that it is World Bank loans that are generating this problem, right? In fact, I would claim that multilateral development banks lending are part of the solution, not the problem, because the terms of our loans tend to be more favorable than the terms that most countries, practically all developing countries, can get in financial markets or from private financial institutions.
Yeah.
So, from the point of view of a development agenda, dealing with this debt crisis is going to be an incredibly important thing to do. I mean, if one thinks about development challenges or the let's say the most salient issues in the world at this particular point in time, I don't know why, but we have several that start with a D, no? I mean, one is clearly decarbonization. I mean, we are in a world that really needs to work on reducing its carbon base to ensure that we avoid a climate crisis, right? Then it's digitization, right? With the pace of evolution of technology in general, and things like AI in particular, you might find excellent opportunities for development, but at the same time, significant challenges, right? Then the other one is deglobalization. No, we are at a point in time where there are many frictions in the international space, where there is polarization, and this makes many of the tools that have been extremely important for growth and for poverty reduction throughout decades, like trade, to work less smoothly, to find more hurdles and complexities, right? So that I also see as a very relevant, let's say, element of the conditions that we are seeing and facing in the world. And the other one, of course, is the one that we were talking about, which is debt.
Makes sense. Yeah. So as I understand it, you're alluding to the more productivity in these economies because of digitization and advent of like fintech products and all these risk management practices that you think will not cause any concern for them to have issues to pay back later.
I'm alluding to the clear potential positive effects of adoption of technology and opportunities that will be created, for sure. But also I'm alluding to the challenges, right? Because, technology will not necessarily be adopted at the same time everywhere, and will not necessarily be available for everyone. And not everyone will be able to benefit from technological advance in the same way. No? So again, it's clearly an area of opportunity. Productivity enhancement, it's clearly something very positive. I mean, if we think about the other, let's say, big trends that I talked about, like deglobalization, right? Or debt. I mean, these are clearly also inflationary, no?
Right.
While digitalization is deflationary.
Right. Right. Makes sense. Speaking of the challenges, right? You obviously mentioned a few different challenges. What would you say is the biggest challenge for World Bank today?
Well, look, our role is to support client countries in their path for development in following a strategic approach that is underpinned in country priorities, right? So, there's no one particular thing which is the most important or the only important one for every single context. No, we operate in the interaction of three important things, I would say. No, the binding constraints for growth, poverty reduction, and reduction of inequality, um, country demand, and comparative advantage. Right. So that is how we determine where we focus the agenda on one given country. But it is clear that the world is facing some important challenges, right? And that these need to be in the agenda, and that institutions like the World Bank need to to shed a light on these issues. We already touched upon two, which are very high on the global agenda. No, one clearly is debt. The other one clearly is well, I mean, I would say digitalization is as well. No, the other one is the ability to continue working together as a world, no, and to take advantage of tools like trade to generate growth and poverty reduction, right? But then there's the huge looming crisis, a challenge that the whole of humanity is facing, which is climate change, right? All of these are extremely important elements of our agenda, and we are highlighting how important they are in a continuous basis and in the dialogue that we have with countries all the time.
Makes sense. Do you think the United States can take some inspiration from World Bank? Does the World Bank have any concern for countries like the U.S. that can adapt some of your playbook strategies to get us out of our situation? Because we have high debt, we have issues with federal budgets, state budgets, we have huge poverty problems here. Education is terrible. What do you think we can learn from the World Bank? What advice do you have for the United States?
Look, again, the World Bank is a cooperative, right? And we are not active, and we do not have programs in developed countries. Rather, developed countries, support us and support our activities in emerging and developing countries. No? But I am convinced that there is always space to work with each other and learn from each other, and what gets done and is created in one context can apply to another. No, so certainly the knowledge that it's created and comes out of the World Bank in some context might be useful even for developed countries. And we have supported developed countries with some of the challenges that they face at times. When I was a regional vice president for Latin America and the Caribbean, there were two massive hurricanes, one after the other, two Category 5. At the time, one was the largest in terms of the extension of the storm. The second one was the fastest forming, and these two happened in a space of a few days. No, Irma and Maria. And in that occasion, we worked together with the Kingdom of the Netherlands and supported their efforts in Saint Martin. No, and Saint Martin is part of. I mean, it's a part of the Kingdom of the Netherlands, and
Right.
and we supported the implementation of a reconstruction set of projects in Saint Martin.
Got it. Thank you for sharing the information. And I'd ask you, what is the greatest pleasure of your professional life?
Well, look, my career has been eclectic, and I think I have been very lucky because I've had opportunities to do things that are particularly meaningful to me. No, so for example, in my at the beginning of my career here in Mexico, being able to to modify, to move the frontier when it comes to regulation of Mexican securities markets is something that I am particularly proud of. Among other things, we have a civil law system here in Mexico, no? So for things to happen, they need to be codified, right? So I created a financial instrument. I proposed a new financial instrument together with the input and ideas of many other people, no? That pretty much is the instrument that dominates Mexican debt markets to get today, no? So that is one I feel particularly proud of. The securities market law, which was issued in 2001, which really enhanced corporate governance and minority shareholder protection, is something I feel particularly proud of. And then, with the World Bank, being engaged with an institution that plays such an important role in touching people's lives, in improving lives and livelihoods, in changing the prospects and opportunities of real individuals. I mean, it's something that gives me enormous satisfaction. Being able to do it from different corners of the institution, no, be it in the corporate space where you're helping build consensus, which are always very hard to build because different countries have different views, management has a view, shareholders have a view, and you need to go around and help people reach a point where you have agreement and you're maximizing value. I mean, that was very satisfactory. And then moving to development and interacting directly with countries and being able to help them figure out how to deal with their toughest challenges, no, and provide ideas and financings. That was super satisfactory. And now being in finance in the World Bank is as well. No? So what can I tell you? I consider myself very lucky and privileged of having had all of these experiences so far.
So besides running $250 billion for the World Bank, what else does Jorge like to do outside of work?
Well, I enjoy what everyone enjoys. No, I like reading, going to the movies, spending time with family and friends. Having a good time traveling. Meeting people, learning new things. No, so.
Got it. And finally, if you had any advice for professionals that are watching you right now all around the world, in the US or Mexico, where you're originally from, like what advice would you have for them if they're aiming for being the treasurer of the World Bank someday?
I mean, I don't know, maybe for young professionals starting their career and thinking how they are going to go about their professional lives. One of the things that I I always recommend is whatever you're doing, approach it with passion. That is the most important. Passion, enthusiasm, love what you do. If you don't love what you do, if you're not passionate about what you're doing, then pick up your things and go look for something else that you can certainly be passionate about. But the truth of the matter is that you can become passionate about practically anything, right? And you can find interesting angles and interesting things to do with any single opportunity that you have. No, I mean, again, my reflection from my career is I've done very different roles. I've done very internal roles, very external roles that require more reflective skills, roles that require more negotiation and external outreach communication skills. And you can always find a way to be passionate of what you're doing, no? So that would be one. The second one is never compromise your principles. Principles are essential to move through your career. So you should always stand by what you believe, and never be afraid to speak truth to power. No. And look, think about yourself and your career and progressing and doing better. That is important for sure. But also think about others, no? Both the people that you interact with on a daily basis, but if you can contribute in making other people's lives better, that is always a massive source of satisfaction. So those would be my recommendations for a young professional.
Mr. Familiar, this has been a pleasure. Thank you so much for your time.
Thank you so much, Najib. I enjoyed our conversation very much.
Likewise. If you enjoyed this video, make sure to give it a like and also subscribe to the channel. And also below, you can comment. You can tell me what I can do to improve the content so I can continue to produce better content for you all. Thank you again for your participation. We really appreciate you.